Hi guys, welcome back to my channel. And today I will be continuing with my series of doing management accounting techniques module on your level 3 AAT accounting, diploma in accounting qualification. And this one for been the practice assessment too. The first one has been done already on my website. Even though there's a problem with my part two of the first video because of some audio clashes, I was unable to re-record it, urgently because twice I've done it. I was kind of disheartened. All my hard works went down the pan twice due to technical issues. I'm hoping I can rectify that today, and I'm trying to convey my apologies to my viewers also. I did promise I'm going to do that as quickly as possible. There were some unforeseen circumstances surrounding the actual exam itself. There were some technical issues. Many of the students been affected by that. AAT is aware of it. AAT, they're working on it. They even spoken to me, spoken to some of my students, and convey their sincere apologies on this matter, even though they're trying to keep the errors to a minimum. Sometimes these kind of things happen, especially when we move into a new qualification. So just to keep in mind, guys, as far as I know, AAT is working very hard to get to the bottom of it one, and of this matter, and they're totally aware of it, all the frustration surrounding it. And it frustrates me, it frustrates anyone involved in there. AAT has been the qualification provider. Sometimes people say, oh, you have to take all the ownership of it. Yes, they do take ownership of it, but they need some extra information because it is randomly happening many places. So even with further testing, they may be able to eradicate it or even reduce to a minimum level. But then again, if problem comes, it will come. So just have to play along with them, see what we can do, and see how it is reacting to it as well. And then of course, it's very important to see we want to complete this qualification, and I'll do what I can helping you with the actual qualification with this video. It's just another feedback video again. And of course, as I said to you, going forward, I will be doing similar kind of a practice assessments, not just with the ADs, like, from the green light test and everything, just to give you some extra, the breadth to the contents the students expecting from these kind of videos. So it may help going forward. And then yeah, without saying to you, thank you so much for the 500 subscribers to my channel. And I didn't believe it when I saw my eyes. I was like, suddenly it's 500 subscribers there. And I certainly appreciate that one. If you like my videos, please be sure to like and subscribe to that. And if you put the notification icon on, it will certainly give you something like a quick heads up when there's a new video out. And then I'm planning to do business awareness in coming weeks as well. Even though that is going to be theory intensive unit, I'm going to be, doing my best to just give you some guidance. How are you going to work on those kind of questions? Because most of the time they say, "What? This is theory. What I'm going to speak about on the exams? It's about tricks and how you do, certain exams. Even though you lack all the what is that again? The theoretical knowledge. There is always a way working around it. How to get to the, the underlying aspect of those exams. All right. Without further ado, we will start with this practice assessment 2. This is going to be part 1 of 2 again, and the part 2 will be spreadsheets, will be done on a separate video. So let's start it now. I'm going to look into this exam. This exam is for 2.5 hours. I'm trying to see whether I can get that done quickly as possible. All right, the first one is this task about costing techniques. Identify whether the following statements about the absorption costing are true or false. So the first one, the value of inventory under absorption costing is lower than the value under marginal costing. So when you see this question, straight away you ask, oh, all right, okay, what is the meaning of it? Because you need to know the difference between absorption costing and marginal costing. Absorption costing is by their function. The cost is diversified is by its functions. Marginal costing is by their behavior. So all your variable cost will be under marginal costing, and all your production cost will be in the absorption costing. But there is one difference in that case. All your fixed production cost get added to your marginal costing to give you the absorption costing. Therefore, that absorption cost always will have a higher value because some of the fixed costs for that period get absorbed with the value of the inventory there for that particular period. On the marginal costing, it goes after you've done your contribution and they take away all the fixed costs there. So therefore, any fixed cost for that period is only get taken away. So the value of the inventory on that case, in case if you have the marginal costing, it will be lower, but the absorption costing is higher. Therefore, in this scenario, the statement is false. And then if you look at the absorption cost of a product always includes the fixed non-production overhead. Again, the word always gives it away. It's not going to be right. But then again, on the absorption costing, the production will only include fixed production overhead, not the non-production overhead. Therefore, that's also again false. Both those two statements are completely false there. Therefore, we can move away from this and move to the next level. Next one is identify which of the two of the following are included in the value of the inventory under marginal costing. As I said to you, all my variable cost. So in this scenario, fixed production overhead, no. Periodic cost, what is the meaning of period cost? It's your fixed non-production overheads like rent, electricity, gas, council tax, anything such things, they will not be part of your marginal costing. Prime cost and the variable production overheads are, because they're both variable cost. What is the prime cost again? It's not the cost of one prime can. It's prime cost is your total direct cost. Any direct material, direct labor, they will be all classed as a prime cost. So therefore, the answer will be prime cost and the variable production overhead. Now let's look at the third part. In this one, they're saying here, the department has materials which are no longer required in production have been returned to inventory. So when you do inventory accounts or management accounting, when you do thinking about the T accounts, always think about it. Debit side is always in, credit side is always out. So if you have goods received from somewhere, the receiving department will have a debit entry, the issuing department will have a credit entry. But in this scenario, the production was returned to the inventory. So the inventory will be a debit. The production department, because it's going out the item back to the materials, to the inventory, they will be credit. Because normally, if the goods are issued from inventory to production, production will be a debit entry, inventory will be a credit entry. It's simply reducing the assets on those areas. Remember, inventory account is an asset account. So if you give some of the assets, what happens? It will be a credit on there because it's removed from that asset account and it goes into the production account. Production account is also going to be sort of an expense account. Think like that way. Now, let's look at the next one. Marvelous Bakery is a manufacturer of breads and cakes. Specialist ingredients are used in the manufacture of basic cupcakes as well as flour, which is used in several other products. During November, 20,800 kilograms of flour was issued to the production to bake basic cupcakes with a value of 51,168. So let me just see whether I can get the calculator out on the screen. And let me just change how this screen is shared. So because instead of that, I'm going to just share the desktop. It's easier if I do that way. Yeah. So you'll be able to see the calculator as well. So in that scenario, it says here, the production of basic cupcakes, the value of 51,168. Identify the correct journal. Okay. There they're asking you, because it was issued to the production. It's the same thing I have told you earlier, which is the right opposite to this one, because from the inventory, I'm moving this product into production. So inventory will be a credit. The bank, the production department will be a debit there. So, all right, I got that one done. Now, probably I need the calculator now, definitely. Okay, so let's have a quick look at it. So here, the specialist ingredients for basic cupcakes were ordered once during November. The Marvelous Bakery used the EOQ to order the specialist ingredients. The following details are available: annual demand, annual holding cost per kilogram, ordering cost is per order, and cost per kilogram is 4.5. What is that again? Per kilogram. Okay, so therefore, we have all this information. Now we have to find the EOQ. So if anyone remembered how the EOQs works, I'm going to show you in a formula quickly. So the formula will look like this. So let me just open blank Word document. So here, the EOQ formula looks like this. So here, what we have to do, the EOQ, let me see whether I can increase the size of it, is equal to the square root of 2x cost of ordering multiplied by annual demand. So I probably have to reduce the size again. It looks like it's a bit too big. Yeah. And that gets divided. So I'm just going to put this here, underline it. Cost of holding. So if I want to simplify this in a way, it makes more sense. It's going to be square root of 2 COD, and you divide this by CH. So it looks like 2 costs divided by chips. Cost of holding, isn't it? Cost of ordering multiplied by demand. So yeah, if you want to remember it, remember it's square root of 2 costs divided by chips. Okay, so it is cost of ordering, annual demand, and cost of holding. So let me just bring my calculator here, good old faithful calculator. So we have the amount we have now, 2 multiplied by, the ordering cost is 45, multiplied by 135,000, which is the kilogram, multiplied by £4.50. That gives you 54,675 pounds. And the whole cost of holding is going to be divided by 15 pence per kilogram. So that gives you, oh, hold on, why you get that one? Let me check that one. Yeah, let me do it again. I think the calculator just played up with it. Give me a second. Yeah, okay, let me try again. 2 multiplied by, easier if I do that way, multiply by 1 £4.50, £4.50, multiply by 135,000, multiply by £4.50 equal to that, and we divide that figure by 0.15. So that gives you 36,450. Hold on. I think annual demand is by the kilogram, not by the value. Yes, this one we'll use to calculate the cost of the, the ingredient you go to order, we're going to multiply by 450. Annual demand is not the cost of it, it's the volume of it. So let me try again. I think it might be third time lucky on this. So here, 45, 45, multiply this by 135,000, and then divide this by 1 point, no, hold on, 0.05. I'm struggling with this calculator here on the computer. All right, now we have 81 million. So if you want to find the square root of it, if you click on this one, and it'll give you 9,000. If you notice that here, 81 million divide means, like, if you're trying to find the square root, if you click on that square root icon, it give you 9,000 kilograms. So let's go back into that exam again. The answer will be 9,000 kilograms. But they want you to find what is the total cost. The total cost will be 9,000 multiplied by £4.50 per kilogram. That should give you 40,500. Sometimes if your answer doesn't look right, always check for what you may be missing. Because if you notice that here, if I use that £404.50 in my calculation earlier, I would not be able to find the cost after that, because it's the quantity they wanted first. If it comes to the quantity, the cost per kilogram should not be in that, as I showed you in this formula here. So remember this formula: 2 cuts divided by chips, the square root of it will be the economic ordering quantity. Okay, now let's move on to the next one. The next one is, in addition to the flour and the specialist ingredients, the other cost incurred by Marvelous Bakery in the production of basic cupcakes in November as below. Your direct labor, variable production overheads, fixed production overhead, fixed administration overhead. So therefore, if you notice that here, this is your prime cost, then your variable cost here, and then you have your fixed production overhead, which is going to give you absorption cost and your total cost once you are to that one. So they're asking you calculate the total prime cost. So here, if you notice that on the part 1, here they're talking about this basic cupcakes. This is your flour we're using there. So we make sure we add that cost to this cost, and the one we calculated here, how much is your specialist ingredient cost. So therefore, let's get the calculator out again and start doing that amount, which makes a little bit of sense here. Now, all right, 51,168. And then we have plus 40,500 plus, and the third one we need is your labor cost. So if you add your labor of 103,000 to it, that gives you 194,668 pounds. So here, 194,688 pounds, 668 pounds, sorry, 668 pounds. Yeah, 194,668 pounds. And then they want to find the marginal cost to this one. We add that 56,000 pounds, 56,250. That gives you 250,918, 250,918 pounds. And the absorption cost in this scenario, add any fixed production overhead to that one, only that one, not the fixed administration overhead. So we're going to add the fixed production overhead of 96,326 pounds, which give you 347,244. 347,244, and that should give you the total absorption costing. Now, we've done that all. Then they're asking you on part C here, Marvelous Bakery has been working on a batch of large novelty cakes for an event in December. At the start of the November, work in progress of novelty cake valued at 3,264, with further cost incurred during the month of November, your material, labor, and your production overhead. Calculate the total production cost to the date for the novelty cakes. So if you notice that here, this is my opening inventory. When we start with, this is the work in progress. We are going to work on it. Okay. So here, calculate the following cost. Okay. So if you notice that here, the total cost of production is going to be the value of everything together, I'm assuming. Let me check. Yeah, let's start with it. 10,244 plus 8,367 plus 70,000 plus the 3,264. That gives you 151,875 pounds. 151,875 pounds. But if they ever give you a closing value as well, a work in progress closing inventory value at the end of that month, you need to take that away. Remember, any opening inventory or opening work in progress, they gets added to the value of the cost for that particular period, and then anything of a closing inventory will get taken away. So the amount you got here is 151,875 pounds now. So now next question is asking you here, at the end of November, 1,900 novelty cakes were completed. 800 novelty cakes were partially completed. The partially completed work in progress novelty cake was 75% complete. So we need to find the equivalent unit. So therefore 800 multiplied by 0.75 means 75%, which give you 600 equivalent units of the partially completed one plus the fully completed 1,900. That gives you 2,500 equivalent units. So therefore, what we now have to find out, calculate the cost per equivalent unit of the novelty cakes, enter your answers to the nearest penny. So if you notice that here, the cost we have found out earlier, 151,871 pounds. So I'm going to put 181,750 pounds, divide by 2,500. That should give you 60 pounds and 75 pence. If you notice that, guys, again, the equivalent units, it's the amount of works done on this partially completed units to make sure if there are full completed units. So 800 cakes were done, 75%, that is equal to 600 equivalent units. And then you add that to the 1,900, you get 2,500 units. You divide that total cost, production cost, by that 2,500, you get 60 pounds, 75 pence. Now they're asking you, what is the closing value of the work in progress of the equivalent, what is that again? The novelty cakes. Enter your answers to the nearest whole number. So if you notice that now, we have found 60 pounds 75 pence. How many equivalent units of the cakes I have? Remember, it's 600 items. AU means not 800, it's 600 equivalent to that one. So this amount multiplied by 600 should give you 36,450 pounds. So here 36,450 pounds, which will give you the value of what you left over here. This gets taken away as part of my calculation of as my opening inventory for the next period. But this period is going to be the closing inventory because you're not selling it, are you? It's going to come out of that production cost later on. So I've done that now. Let's answer it. Let's move on. They're asking you here, this is about attributing cost. Kitty Pie Limited is a manufacturer of kitchen equipments. Overheads are allocated and apportioned to the departments using the most appropriate basis. Now, there you go. This is where you need to have some sort of a knowledge of how process works when they're going to allocate or apportion to departments. So now, if you look at that here, depreciation of motor vehicles, can I do with the cost allocated? Because motor vehicles can be related to multiple different departments. But how I'm going to find the cost according to it, it's by their carrying value, because carrying value will dictate how much depreciation can I charge for each department and what motor vehicles they have left over. Can't do with the floor area power usage. Office rent and rates, it goes by the floor area because more space they use in a department, that is going to be how that's going to be what is that again? Attributed. The next one is department of and supervisors salaries. That's going to be basically allocated because they will be for that particular department. I can't allocate production supervisors salary to the admin supervisor salary. So he has to go to the right department. Electricity supplied for the machinery is going to be by the usage, because you will be able to gauge it, how much is spent, like installing a meter there. Now, let's look at the next part. Excuse me. Sorry. The value of actual overheads incurred by Kitty Pie Limited last month was lower than the overhead absorbed for the month. So therefore, the actual overheads is lower than the overhead absorbed. So that means we have under absorbed or over absorbed. Imagine that the word they use here. If did I absorb enough? So if I didn't absorb enough, we call that an under absorption, because we haven't done enough. Overabsorption means we have absorbed too much. The actual cost is lower. So therefore, in this scenario, it's going to be an overabsorption, because the cost itself, the actual cost, is lower than what it was absorbed for the months. And then what will that going to do for you? Because if your actual cost is less than the budgeted cost, it's going to result in a profit. Because what is that? When we absorb the cost in the past, we have done more cost there. So when the actual comes in, the difference between them will be credited to my profit and loss statement as an extra income, or maybe that's going to be increasing the profit for you. If it's an under absorption, it is the opposite, because we haven't absorbed enough. It's going to cost me more for that period. That means it's going to be debited my profit and loss statement, and that's going to result in a less profit, or even incur a loss for you. So next one here, we have given a table now. That table is overhead cost of service center need to be reapportioned to production and assembly. I need my calculator for this one, regardless of what. So what I'm going to do, I'm just going to get my phone. Oh, I might do in that online computer anyways, it's fine. I hate it, but then I have no choice. Now, let's see here. Can I show you something as well, guys? In this scenario, you have the reference material here. You see that? If you go click on the reference material, you can have this next to each other if you have a bigger screen, because I'm working on a laptop, so it doesn't have a bigger screen. But here, it's still fine. It is covering all of the relevant area. So if you need it, you can still reuse the reference section of it, which brings this particular reapportionment table to the side, so you'll be able to work a little bit more on it. Okay, so if you notice that here, you can still check that further down. All right, so the first one there, it's telling you here, they want to reapportion it. So here, administration, it's basis of percentage of the total employees. So they're looking at that 45% of the total cost. And then you also have, what is that again? 25%, 15%, and 15%. So basically, this is going to be reapportioned to these four departments. But then you may ask me, what I'm going to do with this figure, because if you notice that here, use minus signs to indicate any negative figure. So here, this is going to be minus 675,000 pounds. You don't have to do the thousand separator, guys. It is not relevant here, okay? But if you have the habit of it, please do. But as I said, don't waste your time. But this 675,000 pounds, it is going to be reapportioned using this percentage is being given to us. So I'm going to just type it here. I will tell you a shorter way of doing it. Ignore the zeros and then use the percentages of the, into a decimal. So you're going to multiply this 0.45. That gives you 30375.75. So what are you going to do here? You're going to the production 303,750. It's just a way of maths works. You don't have to be wasting your time typing all the zeros, as long you can remember how to put that back on your answer. If you don't want to, you can still do this way. Look, I'll show that to you again. 675,000 pounds multiplied by 45% equal to 303,750. How many extra keystrokes are there? A lot more, I tell you that now, because you can save a lot of time by adapting yourself to, a little bit of a math quirks just to help you with the formulas. Okay, so the next one they have is a quarter of that one. So 675,000 multiplied by 0.25 is going to be 168,750, and 60,750, and then 15% of these two. So it is exactly going to be same 675 multiply by 0.15 twice. So it's going to be 101,250. Okay, done them all now. Then now I'm going to look at the maintenance department. Maintenance department's cost get distributed to delivery department, assembly department, and production department, depending on the carrying amount of your plant and equipment. So if you notice here, this is the total carrying amount. The basis of it, how you're going to do, you need to find what is the total carrying amount. Again, I'm going to ignore the zeros here. All the zeros I'm going to ignore. I'm going to just add the biggest numbers to find what is the total value of my carrying value. 56 plus 49 plus 35 is equal to 140. So it's going to be, if I'm going to convert that into a number, 1.4 million. So what I'm going to do, this is going to be the number I'm going to be denominating. Okay, so this is the number I'm going to devise, divide the total cost here, which is going to be altogether at the moment, it's a new amount there. So I need to know what is the new amount. The new amount we're going to be working on is 178,750 plus 101,250. So it's going to be 280,000 pounds. So I'm not going to think twice before I put this number here first, because don't forget this is important. Okay, so here, this amount, I'm going to divide by 140, which gives you the value of maybe 10,000 or 1,000 pounds, yeah, whatever is there. And I'm going to multiply that by that 56, which I have initially used to calculate the 140. It's a simple percentage, isn't it? So the amount I'm going to have here, 112,000. And then you're going to look at the next one again. So I know the amount we're working on is going to be 280,000 again, 280,000. Divide by 140, multiply by 49, and which gives you 98,000. And the last but the least, you can simply say add these two, take from away from here, it's going to give you 70,000. But again, let me prove it to you. My calculation should be right, because if you notice that here, 280,000 divide by 2,000, no, hold on, 140, yeah, 280,000 divide by 140, multiply this by 35 equal to 70,000. I got that. Don't need math. You don't have to be a wizard, in maths to do these kind of things. It is simply going to give you the output expected of you. So you've done that now. The next one is, now we have to reapportion the delivery. So if you notice that here, the delivery department's cost is reapportioned by the number of hours used in delivery. So therefore, the delivery hours 6,280 and 37,200, they get added together. That should give you 10,000 hours. I don't even have to look at my calculator. No, hold on. It's 11,000 hours. So let me prove it again. Don't use your mental maths like I try to do here, but I just want you to make sure you have the right information. So here, that gives you 10,000. Yes, it is right. It's 10,000 here. Because 6 and 3 is 9, plus 1 is 10,000 delivery hours. So now, if you have any doubt in your mind, use the numbers provided with the calculator. Calculator is your choice of weapon. You cannot carry anything else to the fight but your calculator. But most of the time, when it comes to spreadsheets, you don't need calculator, but this part of the exam, you definitely need a calculator, guys. So here now, let's look at the the cost we're going to reapportion, which is going to be the total of all of this. So now let's find out how much is that one. 137,750 plus 101,250 plus 70,000. That gives you 309,000. So I'm going to minus 309,000 pounds. And then I'm going to reapportion the cost the similar way. I'm going to say 309 divide by 10,000 multiply by 6280, and it gives you 194,502 pounds. Okay, no, hold on. No, not 502. It's 05252. And the last one is I'm going to do the similar calculation again. The amount from 309 divide by 10,000 multiply by 3720, and that gives you 114,948. So 114,948. Let me prove it. Yes, 114,948. So let's calculate it again. 114,948 plus 194,052 is equal to 309,000 pounds. So your calculations are all impeccably done without any further issue. And there are 12 marks for this question. It's a lot of marks for the overall exam. It's basically 10% of your exam. It's 10 marks equivalent to your 100%. So make sure, guys, this one, do not let it slip through your fingers, because it's a really easy place to get every marks you're looking for. And then if you notice that here, all of that cost, when you add these together, it will give you that amount. So it just does the job for you. So now they're saying here, Zay Limited uses the activity-based costing to calculate the overhead recovery rate. For the production department, this is the number of production runs. For the assembly department, this is the number of inspections. So if you notice that here, it depends on how many activities they do here. Okay, so here they want you to calculate the overhead absorption rate for the production department on the basis of number of production runs. Enter each answer to the nearest whole pound. Okay, so if you notice that here, the production department, they will do number of production is 54. Okay, so if this 54 productions, so if you look at that here for the production department, the total cost is 1,846,260 divided by the budgeted production runs, which is 54. So the rate will be 34,190 pounds, because that is your the absorption rate using the activity based what is that again? They call ABC costing method. Okay, activity based costing method. We're not using the labor hour, machine hour, or units here. We're using what is the activity in this scenario. The activity is number of production runs. They want to also calculate the assembly department's number of inspections depending on there. So if you look at that, the assembly department's 184, so 1,841,860 pounds, and that gets divided by number of budgeted inspection of 19, which should give you 96,940 pounds. That is the cost per inspection. Therefore, that is the way they're absorbing the cost. So they're now asking you, calculate the overhead absorbed for the production department. Enter your answer to the nearest whole pound. So here, this is the rate per production. Since they have done 56 actual inspections, the way we're going to calculate the overhead absorption will be the rate of 34,190 multiplied by the actual activity of 56. So therefore, the total cost absorbed on that scenario, 1,914,640. So that is the rate I have absorbed now. That's the cost I have absorbed for that period. Let's look for the assembly department. Assembly department, actual assembly inspections were done now 18. So we're going to do the similar thing calculating here. The rate of 96,940 pounds multiplied by 18 inspections. So the total overhead absorbed on that scenario. Let me see whether I can copy and paste here. Will that work? Yeah, it does work. Saves me a lot of hassle, to be honest. Yeah, wow, that's okay. I may use that. Yeah, that's not bad of an idea. But don't use that on your exam. Do not use the calculator on your screen in your exam, guys, because you should carry your own calculator. The reason I've done that, because in your exam, if you open any other third-party software whilst you're working on the assessment, it may deem your exam invalid. So be careful. Use your standard or a scientific calculator, which you may carry with you to the exam. Be careful with this, because they have said that if you have any unauthorized third-party software apart from your exam software, for this exam, you can open Excel, but you cannot open Excel. Say this right. The exam will open the Excel for you and it will close the Excel for you. So you don't have to go to the start menu and look for that Excel there. All right. Do not do it. So now they're saying here, next one, the actual overheads for the quarter for the production department totaling at 1,915,368. To calculate the amount of under or over absorbed overhead production department for the quarter, enter your answer to the nearest whole pound. Of course, they're all in a whole pound anyway, so we will be able to work on it. So the actual overhead absorbed is 191,464, sorry, not 191,000, 1,914,640 pounds. But the actual overheads were 1,915,368. Did we absorb enough? No. Because see that here, this is the absorbed cost and this is my actual cost. My actual cost is higher than the absorbed amount. So this is clearly an under absorption by the amount of 728 pounds. That should be your answer. This will be going in my profit and loss as an expense. Therefore, reduce the profit or increase your loss. Now let's move to question number 3. Answer it. Move on. Here, this task is about short-term decision making. Short-term, not long-term, short-term. So here, contribution equals to fixed cost less the variable cost. No. Contribution is going to be revenue minus your variable cost, not the fixed cost minus variable cost. I don't know what is fixed cost minus variable cost. It makes no sense. So the answer is going to be false there. But the next one is contribution can be calculated per unit as a and as a total figure. Absolutely. Why? Your revenue and your contribution are variable elements. Therefore, each carry a fixed or constant amount. If I say my revenue is £5, my contribution per unit is £2, not contribution, the variable cost per unit is £2. So my contribution is £3. If I want to talk about 10,000 items, my total revenue is £50,000. My total variable cost is £20,000. My total contribution, £30,000. Yes, I can say that on that way as well. So that is the word can be gives so much flexibility there, but the statement itself is true. Next one is if the total, they're saying here, match the following definition with the type of cost behavior. If the total cost increases in an equal proportion as the volume of output increases, that is a classical example of a variable cost, because more you make, it will cost more at the same rate. £5 cost per unit, 2 items, £10, 3 items, £15, 100 items, £500. It will go in that same equal proportion. The total cost has an element of both fixed and variable cost. I don't even have to tell you that's a semi-variable cost. When they have a fixed and a variable element, that is a semi-variable. Now, next, look at the next one here. Mosley Heights is a small hotel with 90 rooms. So on that 90 rooms, the cost of running the hotel are as follows. It says here, food, consumables, and laundry, which are variable cost. Labor, which is semi-variable, the cost of manager is fixed, and the other staffs are variable cost to the business. The budgeted total labor cost for 90 rooms per month is 54,240. For 70 room is 44,520. So now, in this scenario, they also said the building and the finance costs are fixed cost. The profit forecast for 70 room is shown in the table below. Each room is charged at the same rate. So they want you to do a calculation of complete the table to show the forecast for the profit for 60 rooms, calculating the variable and the fixed element of the semi-variable cost for both 7 and 60 rooms, and calculating the forecast profit per room. Enter your answers to the nearest whole pound. So here, now I have some information I may use here for 90 rooms, and then also we have for 70 rooms. What these two information are relevant to me? Yes, this can be used as a way to calculate what is my two information I deem very important to calculate a semi-variable cost at any level. We call that the high-low method. High-low method is normally the high cost minus low cost. 1 second, please. My apologies. Saturday is calling. I have a cricket match to play in another 1 hour. Oh, sorry, 2 hours. And I'm recording this video, so just to get this out of the way for me. So, yeah, that's probably the reason. The people trying to chase me up there, but that's fine. It's summers here. Time to get a little bit of a sports going on. So here, the high cost minus low cost will be divided by high activity minus low activity. What this will give you is something called variable cost per unit. Once you find the variable cost per unit, you should be able to apply that variable cost per unit at any level of it, high activity or low activity, find the total variable cost. So if you find the total variable cost from there, total variable cost is part of the total cost. So therefore, if you take that away from the total cost minus total variable cost will be equal to your fixed cost. So these two, Control B, and this fixed cost can be used at any level to find the total cost at that activity. So in this scenario, the calculation is going to be like this way: 54,240, 54,240 minus 44,520, and then you're going to divide this figure 90 minus 70. So the formula is going to be, what is that again? 700. Okay, let me calculate it. I think it's 700. Bring that up here. 54240 minus 44520. Yeah. How far I was away, because I was trying to use my mental math. 54. Yeah. That's right. 54,000. 240 minus 54,520. 44,005, 9,720. Divide this by 20, which is the other one. It gives you 486 pounds variable cost per unit. So here I'm going to apply that at the level of 90 units. So if I'm going to look at the 90 units, total variable cost is equal to 486 multiplied by x90 gives you 43,740 pounds. So my fixed cost is equal to the total cost at that level is 54,240 minus 43,740 variable cost, 43,740 variable cost equal to 10,500. So that is the supervisor's wage there. So these two figures I have calculated, this one control B and this one control B. I'm just going to keep that in mind. These two figures I'm going to use to calculate my level at every one of that, the activity levels. So now let's look at it here. The variable element here in this scenario will be calculated as, get the calculator here on my phone because I just don't want to be going back and forward on that screen. So here, the amount I have, 486 pounds multiplied by 70 rooms is going to be 34,020, and my fixed cost is 10,000. Is that 10,500? Yes. Now, again, let's prove it. If you add these two, that gives you 44,520. Look at that here. 34,020 and 10,500 will be 44,520, which we have calculated earlier. So here, that amount has been calculated. Now, they want you to ask you here, this is the profit now. The profit is 37,980, which was calculated by taking away the revenue, the costs from the revenue now, and divide that by number of rooms. It is going to give you to the nearest whole pound of 500 and hold on. This is 70 room forecast profit. Okay. 543 pounds. Yes, it comes as 542 something. Let me just try again. 790 divide by 70 rooms. Yeah, 542.57. So it's going to be 543 pounds. Now let's do the revenue and the other cost here. So remember, guys, in this scenario, let me get the calculator again. We'll be able to find the revenue per unit or per room and the variable costs, everything according to what we have found earlier. So like you just have to divide the total revenue, 308,000, 308,000 divide 308,000 divide by 70 rooms, it gives you per room charge of 4,400 pounds. And then multiply this by the room charge is going to give you 264,000 pounds. And the revenue for the variable costs is also calculated this way. Divide by 70, multiply by that much, it will give you 39,000. Then the variable element of the semi-variable cost is 486 multiplied by 60 per unit. It's going to be 29,160 pound. And then the fixed element, what is the thing with the fixed element? It does not change. The fixed cost of 180,000 pounds also will not change. So to find what is my profit for that period? We just have to go back in there again. 264,000, 264,000 minus 39,000 minus 29,160 minus 10,500 minus 180,000. That results in a profit of 5,340. Look how drastically their profit has come down because it's just loss of some units. So here, no, I don't want that. Okay, so here, let me create a calculator. The profit forecast per room is 5340 divided by 60. That results in 89 pounds exactly. Okay, so therefore, look at that profit has come down all the way to 89 pounds from 543 pounds because they just couldn't fill 10 more rooms. Basically, that extra 10 rooms are your profit. Then they also look at that here. The owner of the Mosley Heights are considering renting some rooms to local businesses on a commercial basis. The following additional information is available. Selling price per day is 150. Variable cost per room per day is 25 pounds. Fixed cost per room per month is 2,000. And then they also want you to find out this information can be viewed in the reference to sections to the right. Okay, so then that's fine. Asking you here to calculate how many times each room must be let each month to order to break even. So to do the break even point, you also have to remember there's formula for that as well. The formula is always going to be like this way. Fixed cost divide by contribution per unit. So here in this scenario, the fixed cost is £2,000 per month. The contribution per unit can be calculated 150 minus the 25 variable cost, because that is your revenue minus your variable cost is 125. So that means £125 here. So get my calculator back up, and then I'm going to clear 2,000 divide by £125. That tells you you have to sell at least for 16 days. How many times each room has to be let in order to break even? So therefore, it is 16 times. So now let's go further down. The room could be rented for 50% more per day if they are converted at an additional fixed cost of £1,000 per month per room. Complete the following table. Enter your answers to the nearest whole pound. The revised contribution per day, per room per day. So what we now have to do here, the fixed cost now has increased, isn't it? So it will be more chance. So here they're saying here, there's a possible chance of 50 times more if they, if they done like that way. So let's see here. What is my fixed cost now? It's 3,000. Yeah. The contribution per unit. Hold on. Or 50% per day. Yeah. So the new selling price is going to be 225,000 pounds, isn't it? If you notice that here, let me just get that here. The initial contribution was 125 because 150 minus 25, because the new selling price now 50% more. So that's going to be 225 pounds minus the variable cost, which hasn't changed yet, gives you the revised contribution per day is 200 pounds. What is the fixed cost per room per month? Revise the fixed cost per room per month. So if you notice that here, we need to find out initial fixed cost was 2,000. Now the new fixed cost is 3,000. It's not that hard as I thought. But then again, they want you to calculate how many times each room must be let each month in order to break even under the revised plan. So again, the fixed cost divided by the contribution per day, it's going to be 3,000. Divide by 200, it's going to be 15 days. It's just one extra time. That means out of 30 days month, here they have to rent for 16 days to break even. With this new plan, it has to be done 15 times. So they want you to do using the profit volume analysis to calculate the profit volume ratio, original and revised plan. Enter your answers to the nearest percentage. Okay, so they want you to do what is the percentage. You want to do that again. So if you look at that here, PV ratio. So if you notice that here, the PV ratio is calculated, sales revenue divided by profit, multiplied by 100. So let's see where's the profit they have. PV ratio, PV ratio, PV ratio. Let me just find out what exactly they want here. Let me calculate it quickly with my calculator. Yeah, give me 1 second, please. Profit for the volume ratio. Please. So the contribution here per unit. Where's that on this one? Okay, yeah, let me put this down here quickly. On the Word document. Okay, PV ratio is calculated contribution divided by sales revenue multiply by 100%. So what? I want it there, Control X. Right, so this is what is expected from you. So in this scenario, on the scenario 1, the contribution was how much? 125 divided by 150 multiply by 100%. So if I'm going to calculate here, let's put it this way, 125 divided by 150 percentage. 83.33%. So they want it to the nearest whole percentage is 83%. Look at the next one. On the next scenario, PVP is again calculated in the similar way. The contribution in that scenario is 200 divided by 225, which is your new sales revenue. And then you're going to put a percentage there equal to 89%. So here, if you notice that the ratio of my profit is better on my revised plan. So they're asking you, identify which option is more financially beneficial for Mosley Height is the revised plan, because it returns a better PV ratio. So let me just answer this one. Let's go to task number 4. Yeah, let me see. Everything's filled on that one. Yeah, everything's filled on this. Everything filled on this as well. And everything filled on that as well. So absolutely right. I pressed too far into the oblivion, suddenly opening my spreadsheets. I don't want those spreadsheets. So I'm going to just answer and move back. God, yeah, this is the annoying bit here, because once you go into the spreadsheet, you cannot come out straight away. Okay, here, let's do task number 4. I'll do the spreadsheet once we've done this one. Okay, so let's see here. Task number 4 now. This task is about principles of budgeting and cash management. This task contains part A to F. The standard material price of a product can be established by multiplying the material price per meter, rate per hour, by the total number of quantity of units, quantity of materials per unit, and number of labor hour per unit. It's just material price. Therefore, it's price per meter and the quantity of material used per unit. So that is the easiest way to calculate the standard material price. The next one they're asking you here, identify whether the following statements are budgeted, are true or false. An opening statement compares the budgeted revenue, operating statement. An operating statement compares the budgeted revenue and cost with the standard revenue and cost. No, it compares the budgeted revenue and cost against the actual. Okay, so there's no relevancy to this statement, so we can ignore that bit. The budget, which is continually updated, adding further accounting period, is known as a rolling budget. Yes, so like rolling budget can be monthly, quarterly, means every time there is a new information, the budget get updated for another fixed period for going forward. So that's the type of rolling budget they're talking about, and that definitions matching that what they have said. Identify whether the following statements about liquidity are true or false. So they're saying here, securing a bank loan will improve the liquidity of the businesses. Absolutely, because receiving cash or cash equivalent into the business on that time, therefore it will increase the liquidity of the business. I know you're incurring a debt, but that debt is not something to impact your liquidity for now. Liquidity means you have cash to pay for something which is due. Loan is a long-term liability, therefore you're not required to pay that straight away unless you have to pay a loan shark. The reduction of an arranged overdraft with the bank will improve the liquidity of a business now, because if you have reduction of arranged overdraft, you don't have enough cash in case you require it. Therefore, if you reduce it, it will basically constrict your liquidity. If you increase it, even though you're not going to intend to use it, it's good for the business as a liquidity wise. You may have cash when it's required. So this statement is basically false. Then now next, look at the next one here. Complete the following statement. Liquidity management means management of both cash flows in and out, not in and inflows only, outflows only. It's just balancing, isn't it? Liquidity means we need to have enough cash to pay for what we need, but it doesn't stop incurring extra cash inflows or managing the outflows accordingly. Okay, and the arrangement of additional finance where there is a cash shortfall, because you need additional finance when you have a surplus. Now, when you only have a shortfall, you look for raising some funds. Okay, when you have extra cash, you don't care about that. So now let's see here. They're asking you the question about how there's going to be impacting whether, what is that again? To add or deduct how a business reconciles profit with cash. Remember, profit is calculated with what? Your income and expense. Yeah. So when you have a loan repayment, it will not affect your profit. When you pay an interest on a loan, that will affect it. Okay. But so when you have a loan repayment, it will not affect the profit. So normally when you have this information, when you want to reconcile the information with profit and your cash, you normally take away any loan repayment you have in your statement. So that shows you it's going to be whether increase your profit or not, or with your cash, because they have no additional requirement to it. But then again, when it comes to depreciation, in your profit and loss statement, you take that depreciation away from your, profit as an expense. But does depreciation involve cash? It's just a face value of the loss of your assets value. It doesn't involve any cash payment for the depreciation. Therefore, profit is already shown lower because you have taken depreciation into account. But did that affect your cash? No. If that does not affect cash, you add that back to your statement to increase the level of cash I may have to compare with your profit and cash. And then also purchase of the non-current asset, what happens there? It doesn't change your profit, but it reduces the cash, isn't it? So therefore, you have to take that away from the cash value to reconcile with the profit. And then also capital introduced from owner. When the owner giving you capital, what is that going to do to your cash? It's going to increase the cash flow. So therefore, on the reconciling with the profit and cash, this get added on. It says here, to the profit, you add your cash, sorry, the what is that again? The money it's been input by the owner, it will increase the amount of cash you have in the business. See that here, how they have said, you to the profit, you add and deduct these things to assume the value of your cash. MeetU Limited is a provider of software support. The owner of the business are concerned about the cash management of the business and are reviewing the working capital requirement of the business. Based on the information from the last 3 months, they have hired a consultant to assist them. They have been informed by the consultant that their inventory holding period is 102 days, their working capital cycle is 134 days, the 3 months ended on 31st of December 2022. Extract from the financial statements contains the following information. So you have your revenue here and your trade receivable here. So they're asking you here, this information can be reviewed in the section. Okay, that's fine. Calculate the trade receivable collection period for 3 months ended on 31st of December to the nearest whole day. Assume each month has 90 days. So if you notice that here, this is your trade receivable balance. And if I want to do, what is that again? For a quarter. So I need to find out how to get to this one. So let me just check how I'm going to find the trade receivable days. So here, where's that? Okay, that one, I don't want that. Oh yeah, that's fine. $200 divided by 967.5 multiply by 365. $90 days, 67 days. So here it is calculated like this way. So let me just show that to you again in this calculator. The receivables divided by the revenue. For the year, you're going to multiply that by 365. But in this scenario, it's only for 3 months. So that you multiply that by the 30 days average, multiply by 3 is 90 days. So let's see here, 725,200, which is the receivables figures, divide by 594. That gives you the trade receivable amount per 1 day. Multiply that by 90, and that gives you the returning figure of 67 days. Then now they ask you here, calculate the trade payable payment period for 3 months ended on 31st of December. So the working capital cycle is calculated this way. It is going to be always trade receivable days plus inventory holding days minus trade payable days equal to working capital cycle. So here we have some information already. Your trade receivable days is 67. The inventory holding period is 102 minus the trade payable day is equal to 134. So here, if you swap this formula other way around, you should get how? Let me just get the calculator here. So it get 67 plus 102 minus the 134. That gives you 35 days of inventory paying back periods. 16 marks for this question. It's almost done now. So here we are done. Now I'm going to save this and I'm going to submit this assessment because I'm not going to be bothering about the spreadsheets. It's going to be in part 2 later on. Okay, so let me complete this now and press yes, submit the assessment. And let's see whether I have done okay on my answers. So let's see here. Voila. If you notice, I've exceeded everything on this. Exceeded. Yeah. Perhaps I've done that a couple of times, maybe. I don't know. Maybe I've seen students doing these questions as well in the classroom, but some of the questions can be tricky, but sometimes I may make a mistake here and there. But luckily, I didn't make a mistake. I just confirmed with whatever I had here. My answers are all correct here. So, guys, remember the first four questions will be equivalent to 80, well, 40, 80, 80, 40 and 92. 92 marks out of the 120. So that means if I'm going to put it in a percentage, 48 plus 40, 88 marks. Yeah, 88 marks divide by 120, multiply by 100, they are equivalent to 73% of your exam. The spreadsheet is up almost, it's going to be, what is that again? 88 means 32 marks. 32 marks divided by 120 multiplied by 100 is 26.77. So even without spreadsheet, you still be able to pass this exam just purely doing these four questions. But again, spreadsheet is your easiest one. You're going to get a lot of marks on your spreadsheet assessment. So guys, I appreciate your time with this one. We'll put the links for the part two on the second bit, and obviously, you know, I will be doing that assessment next. Let me just quickly go back in here. Stop sharing it. Okay, so guys, remember this exam for 2.5 hours. So always trying to get the first four questions done, like say in 1 hour 30 minutes. 1 hour 40 minutes, so you leave you enough time to do spreadsheets. Spreadsheets questions are not that intense when you comparatively. Some of you can be a whiz in spreadsheet, some of you can be like, oh, all right, spreadsheets like my kryptonite, I'm going to be struggling with it. So in that case, just trying to see whether you can allocate enough time to do that particular, part of that exam. And then also, it's also very important. Remember, the spreadsheets are the one it's giving trouble on the AAT exams as well. So you may concentrate more on the other bit, and by the time you go to spreadsheets, is any problem there, you can think about it. Okay, there may be some sort of a remedy, to rectify that situations. Once the AAT get to the bottom of the underlying issues. But then again, for time being, guys, I wish you all the best. And I'm going to do the part two bit later on, and the link will be just below in the description bit later on. And again, be sure to like and subscribe. And thank you again for 500 subscribers. And I hope I can improve on my content and attract more of you guys to come and have a look into these videos, and then perform well on your quest to get your qualification with AAT and have a successful career going forward. And then I wish you all the best, guys. Take care. Bye bye.